Hello, everyone. It's Fair Value Finder. Welcome back to the channel. Today, Bank of America had their earnings at open, and we're going to take a look into those numbers and see how things are doing because they came in about right where we expect them to be, maybe even a little bit better. And the market seemed to really enjoy it because the stock was up 4.42% during market hours, up to $30.70, down just slightly in the after hours. But it had a nice little rally today. First thing I wanted to touch on with this stock is this chart because financials, it's a very complicated sector and the market doesn't seem to like financials a whole lot. I personally don't either, especially if I were to go into this sector. I wouldn't buy a massive company such as Bank of America. I'd do something smaller, regional, that has more growth prospects. But we see in 2007, this stock was trading for around $20, and then it finally got back up to that after a fall in 2008. In 2017, fell back to the same point again in 2020 after going up above it, and it ran all the way up to just shy of $50, back down today to just north of 30. So it's been a wild ride for this stock. We see a lost decade here in the chart, which is definitely not something we like to see. From there, I mean, the stock is up 50% from where it was in the COVID dip. It ran up even higher. It had run up over 100%. But is it worth it? We'll take a look and find out. So I already read through the earnings, and there's nothing major to really touch on there. I pulled out anything that was important and I put it into our table here. Just like before, we have the goal for this year. So if they're on goal for this year, they'd have a fair value around $53.48. Now they seem to always trade south of that because if we look all the way back to 2019, the fair value was $60 and the stock price was $35. And 2020, 45 and 30, 44 and 31. So there's like a $15 discount on average to this. 5 in last year, and this year we'll see how things shape up. But right now it's trading at $23 discount. So I do believe there is some upside here. Actually, if we look at the chart, it's probably going to continue the run that it's on, and it'll find some resistance back around the $31 to $32 range where it had a few touch points over the previous few months, and it was a big resistance back in 2019. But with that, we can take a look at these actual numbers, and I mean, I have the percent to go right here, so that's what really matters. They are right on track with revenue, about 1% above. For the net profit, they are ahead, 57, coming in with a 30.29% net profit percentage. And that is one of the higher numbers that we see here. The previous high was 2021's 34.3. As for earnings per share, they're expected to come in with $3.34 this year. So far, they're at $1.83. This quarter, they came in at 88 cents. So they're slightly ahead of track on that. Basic average shares, they do have 3% more to buy back to continue with the trend that we've seen across the history. Right now, they have 7.95 at the end of last year. So 7 months ago, they had 8.1. So they are buying it back gradually. We'd expect them to be down 7.7 range by the end of this year. For the common stock equity, it looks very good off these earnings. They're up over last year's significantly, over the goal. This isn't a number that moves a whole lot typically for them. We see that it's been in the 240 range consistently. So this essentially 255 looks very good. They are just shy of the goal for assets, so they have another 5% to grow it. Right now they're at 3.122. At the end of last year, they were at 3.05. Liabilities, there was nothing on this earnings about bank. I mean, that's typically something that they grow because they're a bank. So their balance sheet is very different, and it's kind of difficult to follow a financial company. But the most important thing is, are they hitting the goals here? Because if they hit the goals, then they are seeing decent growth, which you'd expect that the share price would appreciate along with that. We're looking for a 90-cent dividend this year. So far, they've paid out 44 cents. They do raise it 1 cent per quarter per year, and this next quarter should be when they pay that out, that added dividend. So we're looking for that announcement here soon, and we'd expect the same thing next year, 94 cents. I'm not seeing any guidance on the outlook for the stock either, so this is what we have, and we see that they're on track, maybe a bit better. So I'd say that's going to leave their fair value somewhere between 53 and 55 for this year, and we'll see how things continue going forward. Owned by Warren Buffett. He owns it because he got a special deal. They needed money, he had money, so he gets a nice hefty dividend that the rest of us don't get, that gives him a reason to hold the stock. And we do not have that same reason, so we should not follow him into that position. But since this was a short one, I want to show you guys the stocks that we do follow, what we're looking for when the earnings come out for them, the ranges. So these are the stocks that I have given buy ratings to up top, either buy or I already own. I actually do own all of these except for Madison Inc., which I'm looking for an entry point. I need to finish filling out SWN and WFG, but when earnings come out, this is what we'll be looking for. So like Eastman Chemical, we're looking for, hopefully it'll drop below 179. I know right now it's right around $85. I think it shot up to 88 today. Yeah, 88, right about at close. So, I mean, I'd like to see that drop off earnings to buy in more as long as the picture doesn't change too much. And that's what we'd be looking at here. So EPSN, I mean, that thing's up like 12% since I bought it. It's so undervalued. GGG, I'd have to go back and watch my own video for why I put this as a buy. I think it has really good growth potential, and that's why it's on this list. But like as of this year's fair value and such, it's a little overvalued. In steel, it's like half valued right now. Kroger still has some upside. It's gone up quite a bit since I talked about it, but I do like it under $50. Madison, half priced. Realty Income has some upside to it. It's in the low 60s, so it likes to stay in those 60s and just fluctuate around there. So right now is a pretty good time to pick some up. I picked up $200 today. Tyson, I mean, I love it around that $50 mark. Under 55 is good. 54 seems to be really good value. Union Pacific, I think I need to project this one out more. So we'll see how the earnings come out when they do. But right now it's approaching that fair value. Vici, it's just above where I'd want to be to buy it. If it drops off earnings, I'm definitely, well, I already own 100 shares, so I think I'm okay on that. And then I have some stocks that I want to look into down lower. AbbVie, I definitely want to look at the earnings, see if it's a chance to get back in. Coca-Cola has been on the decline. We had it on our sell list because it was significantly overvalued, and it was one of the first stocks that I did. If I were doing it today, I'd put it on the hold list. But it's something interesting to look at. In the 40s would definitely be where I'd want to be picking that up. And this is what we're looking for. I think Thursday is the next earnings, and it's always an exciting time because there are a lot of videos that are going to be coming out. So I want to thank you guys for watching. Please like if you enjoyed the video. Subscribe to stay up to date on all of these. Comment what other earnings we should be taking a look at, or what I'm missing from this list. What's another stock that should be tracked? If it's on the hold list, it's probably not going to be something that I'm checking in too hard on, unless it's something that you guys are interested in. Right now, I'm looking at any videos that have over 50 views to go back and review those stocks. And if it's anything less than 20, unless it gets requested again in a few months, probably just gonna leave them on whatever list that they're currently on. But thanks for watching, and I'll catch you next time.